Hey everyone, welcome back to Corporate Decoder. Today iQSTEL Incorporated just filed an 8K and I'm seeing a change that could really shake up how investors can get out of their preferred stock. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company made a significant move to make it easier for holders of its Series B preferred stock to convert those shares into regular common stock, and that is a pretty big deal for anyone holding that type of security. So what exactly is going on here? iQSTEL Incorporated, often known by its stock ticker symbol IQST, has filed what is called a Form 8. Think of this as an official announcement to the Securities and Exchange Commission, or SEC, about something important that has happened. In this case, the big news is about their Series B preferred stock. Preferred stock is a bit like a hybrid between a regular stock and a bond. It usually pays a fixed dividend and has a higher claim on assets than common stock, but it doesn't typically come with the same voting rights. The company's board of directors agreed to change the rules for this Series B preferred stock. They approved something called an Amended and Restated Certificate of Designation, or Amended COD for short. This is essentially an updated official document that lays out all the terms and conditions for that specific class of stock. The most significant change is how and when holders of this preferred stock can switch it into regular common stock. Before this change, if you held Series B preferred stock, you could generally only convert it into common stock at specific times, usually tied to the end of a 12-month period after the stock was first issued. Now, they've made it much more flexible. Holders can convert their shares into common stock basically whenever they want, as long as they give the company 5 days written notice. To make things even faster, the old rule required 60 days notice for conversion. They have slashed that down to just 5 days. This means if an investor wants to switch their preferred shares to common shares, they can do it extremely quickly now. There is another important detail for anyone converting. If there are any dividends that have been earned on those preferred shares but not yet paid out, the company will now pay those to the investor when they convert. This ensures investors don't miss out on any earned income up to the exact day they make the switch. This updated plan for the Series B preferred stock was officially filed with the state of Nevada on the 17th of June 2026. This means these new rules are now in effect. We also see a mention of exhibits, which are essentially attached documents that provide more detail. In this case, the actual text of the Amended and Restated Certificate of Designation is included as an exhibit. This specific exhibit, number 3.1, contains the full detailed legal document outlining the new terms for the Series B preferred stock. Anyone who wants to dive into the nitty-gritty legal language will find it there. Now, what does this all mean for investors? It really makes the Series B preferred stock much more liquid and responsive to market conditions. If an investor believes the common stock price is about to go up, or if they need cash quickly, they can now convert their preferred shares into common stock with very little delay. This change is quite significant when compared to other companies. For instance, a company making it very difficult to convert preferred stock often leads to less investor interest in that security, by making this conversion process so much easier and faster. iQSTEL Incorporated is likely trying to make their Series B preferred stock more attractive. It also signals a potential shift in strategy, perhaps preparing for future common stock price movements or seeking to simplify their capital structure. Historically, making preferred stock easier to convert can signal that management is either very confident in the common stock's future performance or wants to provide more flexibility for investors who might be concerned about the company's short-term outlook. It is a double-edged sword that often depends heavily on the overall market sentiment and the company's specific situation. Given the recent news about iQSTEL announcing a share repurchase program, these moves together suggest a company actively managing its stock and capital structure. The risk I am watching is how this increased flexibility in conversion might lead to a sudden increase in the supply of common stock if there is a significant upward move in the share price, potentially creating some selling pressure. What I am actually looking for is whether this enhanced convertibility will attract more long-term investment into the common stock despite the increased potential for quick conversions. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Check out the Discord in the description too.